Assalamualaikum and a very good day to Doctor and my fellow friends. We are from Group 3 and the scenario that we got is a 50-year-old business owner nearing retirement and seeking to ensure his business continuity. So to help overcome the worries, we choose Etika to take out insurance for him and his company. Risk analysis is important thing to do before you taking the insurance because it may affect the important choices in your life. Based on the scenario that we got, I identify 4 risks that will be faced. As a retired business owner, one important risk is a legal concern around succession. Selecting an unqualified successor, even they are a family member, it might result in ownership issue if a lack of succession plan is in the place. This can lead to issues such as a trouble obtaining corporate finances or a lack of confidence among investors, suppliers and shareholders, all of them which may reduce the firm's operation and image. Another concern is financial insecurity upon retirement due to insufficient savings. Without a consistent paycheck, retirees must be carefully manage their fund to ensure their retirement. However, inflation and increased living costs can affect the savings, causing retirees to depend on alternative financial sources such as government help and family support, putting the further burden on their finances and impact their quality of life. An additional concern is the potential necessity for using own cash to fill corporate financial shortages. If the company lacks appropriate backup funds, the owner may have to explore into personal funds to meet expenditures. This can be threatened individual wealth and causes financial instability, as the business owner may be forced to use personal property to keep the firm running, adding to the stress and uncertainty. Last but not least, unpredictable in-company return is considered as a risk. Economic downturn, rising material prices and decreased sales all have the potential to impair the company capacity to satisfy its financial responsibilities. If the firm cannot fulfill its responsibility, the owner may be forced to take out loan or declare bankruptcy. Even after the retirement, the business owner may still have accountable for this debt, which can cause continuous financial stress and limit the opportunity for enjoying their retirement peacefully.
Evaluation method overview. In the scenario of a 15 years old business owner nearing retirement, the capitalist method is the recommended evaluation approach. This method prioritizes financial security and ensures the business continuous operation smoothly, making it more appropriate than the human life value method, which only focus on replacing personal income. Why choose this method? It covers business obligation. It addresses financial responsibilities such as outstanding debt, loan, and operation costs, preventing disruption to the business. Next is ensure business continuance. This method calculates the fund requirement to maintain business operation during a transition, ensure a seamless transfer of ownership or management. It also supports retirement planning that ensure the owner has sufficient saving for a comfortable retirement without compromising the financial security of the business. Next is a key component of the method. This is cover a business need that cover repayment of debt like a loan or mortgage and operational costs for 1 until 2 years, allows the business to continue running smoothly during a leadership transition. It also succession costs that include expenses such as hiring or training replacement or legal tax or tax costs associated with the transferring owner to the heirs or new management. Last is personal need that provide income replacement for the family to maintain the standard of living that ensure retirement saving for the owner and fund for the children education if needed. The step to apply the capital needs method is identify financial obligation by a listing of the potential financial commitment, including business-related debt, operational costs, succession planning, and personal family needed. It also assigns monetary value that estimate the requirement amount for its obligations, such as the cost of clearing debt, covering operational expenses, and planning for retirement. Calculate net coverage that deduct existing resources like saving, investment, or car insurance from the total financial obligation to determine to the net coverage requirement. Last is selected suitable plan based on the identified needs. Choose appropriate takaful or insurance product. For example, life takaful that can cover income replacement and retirement saving, while the key man insurance can protect the business in the event of the owner absence.
So for the coverage calculation, we use the capital needs method to determine the appropriate takaful coverage for the 50 years old business owner approaching retirement and seeking business continuity. We assume the business liabilities at 500,000 with outstanding loans and supplies debt. Retirement income at 100,000 annually for 20 years. So here we assume the owner retire at 60 and live until 80. Succession planning cost at 200,000, which is for the cost of hiring and training. Next is an emergency fund at 100,000 to handle unexpected event during the transaction. So here we use the expected investment return at 5% and inflation rate 3%. So we use the present value of the annuity formula to calculate inflation and investment return using the amount that we show here. And finally, we get 1,644,651 ringgit. Lastly, we sum up all the coverage and we get 2,444,651 ringgit.
So, in insurance and takaful plans, we would suggest a few products from Etika Malaysia that designed to address these critical aspects of offering comprehensive solutions tailored to the needs. First, as approaching the age of 50s, health protection is a must to the insureds. Then, considering Etika Critical Care Takaful Plus that provide coverage for up to 42 critical illness within a Sharia-compliant package. This plan ensures comprehensive protection for medical treatments while offering flexible premiums to fit in individual financial situations. Plus, it helps the insured manage the risk of healthcare cost inflation. To secure financial stability during retirement, the insured should look into Etika Wealth Retirement as a Need. This product helps business owners establish a reliable retirement fund, ensuring that they can sustain their lifestyle after step down from income-generating activities. It offers up to 10% annual cash payout at the end of each policy year, with flexible coverage terms that can be customized to meet the insurer's preference. By addressing the risk of running out of money during retirement earlier, this plan ensures long-term financial security for the insured. In terms of life insurance, Etika Life Insurance provides essential protection for both the policyholder's family and business. In the event of death or disability of the insured, the plan offers financial support to beneficiaries with coverage of up to 200,000 ringgit. It also safeguards business operation by covering expenses for up to 6 months or until a new successor takes over the business. This product is valuable in considering the risk of income loss for families and ensure the continuing operation of business.
For additional insight, firstly, we are looking to cost consideration for the Etika Critical Care Takaful Plus. Based on our senior, he can pay only around 70 ringgit to 100 ringgit annually for his sum coverage, and it also for his contribution rates. Next, Etika Life Secure. As for the age and gender, the 50 years old may pay higher since he is considered as a higher risk. After that, Etika Maxi Wealth, which can guarantee the annual cash payout are up to 10% of the insured amount. If justed, it can accumulate savings and can enjoy cash payout of up to 690% of the insured amount upon the maturity. Second, consideration benefit. As for the Etika Critical Care Takaful Plus, it covers 42 critical illness, which is provide coverage if the 50-year-old are diagnosed with any of the 42 covered illness, and a lump sum amount of 300 will be paid. Next, Etika Life Secure that have a policy is structured for the benefit of the business rather than the individual employee or the shareholder. After that, Etika Maxi Wealth, it had guaranteed approval or for application with insured amount of up to 500k for retirement like a 50 years old. This plan has potential for higher returns over the long term can be attractive option. The long-term sustainability for Etika Critical Care Takaful Plus, more focusing on Sharia compliance and critical illness coverage and no riba and garar, and the long term of critical illness coverage is the plan that the policyholder will be financially protected. Next, Etika Life Secure is supported stable fund management, and the policy terms may get any access with the fund as well. This type of agreement called a surplus sharing arrangement. After that, Etika Maxi Wealth, as for policyholder, will be gained from the compounding impact over time with a consistent premium payments and investment growth, which can raise the policy total value.